Good afternoon and welcome to the webinar for Frasé Skin Holdings. My name is Tim Eisenhauer. I work for OnMarket. We're the licensed intermediary that is assisting Frasé Skin with their very exciting and upcoming crowdsourced funding campaign. The agenda for today, it's roughly about 3 parts. We'll go for sort of somewhere between 50 to 60 minutes, and I see the numbers sort of growing now as we're getting plenty of people coming in. I'm going to give just a brief background on Frasé Skin and their campaign and what they're doing with OnMarket as their lead manager. I'm then going to introduce you to the founders of Frasé Skin. That's Beau and Zach London, brothers from Dubbo who co-founded Frasé Skin, and also their CEO, Mathew Collett. They'll give a short presentation, short overview of the company and the investment opportunity. Then we're going to move to really what we're here for today, the Q&A, the questions from the crowd. This is where everyone online comes to the fore, and I ask you guys to put in any questions that you have already or you have throughout Matt and Beau and Zach's presentation. Please put them into the Q&A portal. You'll see the Q&A tab at the bottom there. The webinar is being recorded, so if you want to come back to it and you have to leave, you will have access to it later, and that will be on the Frasé Skin holding page or landing page. Just some quick details before I hand over to Zach, Beau and Matt. Frasé Skin are looking to raise up to $3 million. They're doing it via a crowdsourced funding campaign with OnMarket, that's us, as the intermediary. The campaign is currently in what we call the expression of interest, or EOI phase. You can't invest at the moment, but you can express your interest. And that's really important because anyone that expresses their interest gets first dibs or first opportunity to invest in the company, and that'll be opening next Tuesday. It's June 30, so next Tuesday. We already have at the moment over 1,000 potential investors who have registered their interest, so it's a very popular campaign. The benefit, as I said, and I'll stress that again, the benefit of expressing your interest, if you haven't done that already, is that when it opens next Tuesday, you will be first in line before the public, before those that haven't expressed their interest, to purchase shares in the company. So after next Tuesday, a couple of days after, it will go public and be open to everyone. But if you express your interest, you do get first dibs on that. The minimum parcel size, so the minimum investment for those that want to come in is $500. If you are a retail investor, there is a limit of $10,000 on your investment size. You can invest above that if you are a sophisticated investor. I'm then going to hand over now to the senior management, the founders, the brothers from Dubbo, Zach and Beau, as well as CEO Mathew Collett, to run through a few slides, and then we'll come back to questions from the crowd. So if you do have any questions, please put them into the portal. Handing over to you guys. Welcome. Have to take yourselves off mute, boys.
G'day guys, thanks for coming today. Yeah, I'm Beau, one of the co-founders of Frasé Skin. Started this back in our spare bedroom 3 years ago. Well, 6 years ago, actually, launched 3 years ago. And, we did it out of the frustration that there was no men's skincare made for a trader like us. And, the big brands make skincare for men in suits. We make skincare for men in boots.
For that, Beau. Welcome, everyone. And we're pretty excited about this journey and the story. So I've got a presentation to go through, so we may as well dive into that as quickly as possible. So, as Tim mentioned, we're doing a crowd raise, looking for a maximum of up to $3 million for Frasé Skin, a relatively new men's skincare player on the market, which we've had some amazing success over the last 3 years, which I'll begin to go through. So, look, I think the problem is fairly obvious. I mean, one thing that we're all educated on, Australia's high skin cancer rate. 1 in 8 Australians will develop skin cancer in their lifetime. Outdoor workers are 3 to 10 times more susceptible to UV exposure, just their lifestyle. 74% of tradies actually don't have a dedicated skin care or sunscreen routine. 89% of tradies that we researched and spoke to would use a product if it was designed for them. 61% are willing to pay between $25 and $40 per product, which is where we sit. And our market just in Australia, there's approximately 2 million technicians and trade workers in Australia, which account for 14% of the working population, so quite big. Part of the problem, tradies traditionally, or outdoor workers traditionally, don't look after themselves. They ignore skincare, skin health. At the moment, until us, there was no real functional solution for them. There's a massive health risk for them. Like I said, it's one of the highest cancer rates in skin cancer rates in the world, costing the government approximately 1.2 billion annually. And at the moment, there is no clear brand leader in this space until us. The solution, again, obvious one, sun protection. We've got at the moment, we've got 2 SKUs or products that are SPF related, and skincare. So we've got a range of skincare that are there for washing the face, washing the body, getting all that grime off, then moisturizing it, and then protecting it. So that's sort of our range. One of the things that stands us out in this men's space is vitamin D technology in the SPF, which we licensed from another company, Solar D, which I am also a director of. So that technology allows for the skin to be protected with the SPF, but it also allows some of the UVB light to come through for our bodies to naturally produce vitamin D. Talk about our range and where we've been and where we are now. So in 2024 or 2023, we actually launched right at the end. It was the last 2 months of the financial year in 23. We had 2 products, daily moisturizer and the daily cleanser. The boys launched with this. Like they said, they did this in the back of their mum and dad's garage. It was a concept. They didn't know where it was going to go. They didn't know what it was going to do. To be honest, their specialty was the tradies coming from Dubbo. That's all they knew. So this was a big risk. So they borrowed some money off the old man, and off they went and started this range with 2 SKUs. In the first 2 months, they turned over roughly about 40 grand, all just on e-commerce. They set up the website. It wasn't a great website, but they started getting traction, and it was purely because they were hitting a market. As you can see today, we've now got 10 SKUs. We've developed, especially over the last 2 years. So we've gone from just those 2 simple brands. Now we've got face and body. We've got nose strips for blackheads. We launched a ball wash not long ago, which was part of a campaign for testicular cancer awareness, one of the biggest killers of cancers in Australia for young men, believe it or not. So we're quite proud of what we've developed. We are still bringing out more products. We're just about to bring out a face clay as well. So we're intending to probably bring out another 3 or 4 products by the end of this year, with extensions coming into 2027 as well. So we're forever growing. Yeah, just a summary of the range. Like I said, we've got daily moisturizer. We've got a grub scrub for the face, which obviously cleans all the clogs in your skin. The ball wash, the nose strip, the esky, which is hugely popular. We often use it for giveaways as well, or extra bonuses if someone spends over $100. We've got the fix up scrub, which is for the body wash, 2 SPFs, and we've got the daily cleanser. Competitive advantage, like I mentioned before, we've got the vitamin D technology. We license that IP. We're the only men's brand in the world that uses this technology at the moment. First mover brand. We were the first mover 3 years ago to take on this outdoor tradie market. Since then, we've seen a number of copycats come into the market. We know they haven't had too much success. Some have actually failed. So seeing the growth that we've had, this first mover advantage, as probably most of you know, is super important. Community and culture. We work with a lot of opportunities, whether we're backing community, we sponsor sports clubs by donating skincare. A lot of the sports clubs we sponsor are really excited that we get to hand out products that are related to skin health in the space and protect their players and their volunteers. Australia made, obviously, that resonates with most of us. Everything's made in Victoria, and so that we'll keep that way. We are launching in the US, which I'll go into, and that will be eventually made in the US for the US market. Market opportunity. Obviously massive. Men's skincare, obviously still a minnow compared to the global skincare market, but at the moment, the men's skincare market globally is 17.4 billion, projected to grow in 10 years to 52 billion. In Australia, we've got, like I said, we've got approximately 1.2 million tradies. When you add in a lot of the other outdoor workers, it's almost 2 million. Market annual growth is massive. Again, if you look at global skincare as a whole, your growth is anywhere from 4 to 6%. The men's growth is double that. So, like I said, it's still the minnow, but its growth is incredible. As you can see, our channel opportunities, obviously, retail trade, which is, I'll go into it a sec, direct to consumer, which is what we're doing, how we've modelled our business through fraseskin.com.au here in Australia and fraseskin.com in the US, and also Amazon US, which we're launching next month. Market strategy, trader influencers, trade media. We use a number of influencers both here in Australia and the US to promote the brand and the products, which has been hugely successful. Gives a very much an independent solution to the problem that we know about. Health partnerships. We're working with a number of groups to get that health message across. Trade retail distribution, working with one of Australia's major grocery chains at the moment. We have had let's say a tick that we're going to be entering that grocery chain this year. We are just waiting on some final samples to be delivered for final sign off. That we expect that to be happening in July. So that's another huge step for us to be in, like I said, Australia, one of Australia's largest grocery chains, and there's only 2 of them, so I won't give away which one. Traction and growth. Look, this is the great story. FY23, which I said was only for 2 months, was about 50 grand. FY24, roughly 480 grand. FY25, we grew to 1.25. This year, we're looking at 3.5. So, huge growth, total growth from starts over 600%. We've now got 40,000 customers, and that's growing. Our biggest month was last November, 650K. The year-on-year growth, 172%. 3-year, like I said, 3-year track record. We've got over 120,000 combined social media and email subscribers. And as mentioned, we're looking at roughly a 3.5 million revenue this financial year. More numbers, and they just, these are all numbers that just don't lie. Customer return rate is quite a big thing in our game because we're an e-commerce provider. Roughly 40% we get return customers. The average order is about $90. Like I said, we've got 60,000 email subscribers. When we launched our e-com page in the US, we're working with a group to promote the brand and the products. First 30 days of that US launch, we saw 1.1 million creator impressions, which is massive. We've now got 130 affiliates, which are these sort of influencers we use on the books in the US. And that partner said it was the highest revenue generating they'd had any of their clients in the first 30 days. And there's some just other number of nearly 50,000 Instagram followers, 14,000 TikTok followers, Facebook. So these are numbers as of this month, and we're just seeing this continually grow. Growth opportunities, as mentioned, one of the big growth opportunities is Australian retail with this grocery chain. Our target is to launch with them, like I said, get sign off in July. Purchase order and delivery is probably expected to be September this year. That's yet to be confirmed, obviously. We're going to focus on that one retailer. We do get questioned a lot on, are we trying to get into other retailers? My experience and background in this space is too much growth can be very, very damaging for a business like ours. Obviously, each retailer you're in means more marketing, more concentration on that individual retailer. So our focus is to grow one retailer at a time, and that could be one every year, depending on our growth. US bricks and mortar, we've got a partnership with a group called TriPoint in the US. Their experience is getting us into bricks and mortar. I don't see that as a quick turnaround. Being the US, it's not easy. They want to see growth first. That's probably more of a 2027, 28 opportunity. US e-commerce, as mentioned, we've launched our own website. That's already income generating, and we're about to launch on Amazon in the US, which is huge. Amazon US opportunity is with a partner called Rivel Pro. They have a Amazon shop front, and they buy directly from us. Lower margins, but higher volumes is the trade there. And obviously New Zealand and South Asia is the next on the list. We have a snapshot of the company timeline. 2020 was when Beau and Zach set up and incorporated the company. April 23 was the first launch. Year one was over 450 grand in sales. Biggest month, like I said, November was 650 grand. US Shopify e-com website was set up recently, just in May 2026, which is now generating sales. Amazon is next month. Year to date, I think we've covered that. And Australia-wide retail distribution is on the books. Like I said, we'll be doing that very slowly. Traction and validation. One thing to have the products we do have. Another thing is getting the ratings. Obviously, is super important in an e-commerce space. So having an average rating across over 200 reviews of 4.8 is excellent. And we continue to monitor that. We make sure that all our products fit in line with that high rating. Like I said, 39% repeat purchase rate, super important. The business model, which I sort of covered, we've got direct to consumer online, which is existing. So margins there they vary a bit, but between 72 and 75%. The wholesale distribution, for an example, with our grocery chain we're talking to, is going to be roughly 50%. And then Amazon, because we're dealing direct with a store front who buys from us, takes on all the risk of the marketing and the expenses, much lower margins, around 35%. Gross margin blended, roughly at the moment, it's about 60%. As Amazon obviously increases our part of the pie, that gross margin will obviously come down. Cost of acquisition, again, in e-commerce space, this is quite important. That's around $45. Lifetime value of a customer is roughly, and that's in a 12-month period, is around $136. Media, we've been prevalent in the media. They love us. They love the tradie stories. They love Beau and Zach, two blokes from Dubbo, having no idea about skincare, not really sure what they're doing, launching a brand and becoming a success. So the media loves us, and I did send it out yesterday. We were on Today's Show yesterday, which was a huge success. And they'll just continue putting us back on every time that we hit another milestone. So there's a few examples, as you can see, what's happening in the media. Exit strategy, obviously an important one. I mean, there's one thing to come into this business and invest and come along for the ride, but what are the options? Trade purchase is probably, in my experience and my background in this space, the obvious one, and that would be selling to a Nivea or a L'Oreal or whoever we sort of break into. That's not in the near future. That's a longer term. These guys like to see your company turning over, probably north of 50 million. There is an IPO option, something we could possibly look at doing down the track. There's private equity investment where they would probably come and take probably a controlling interest if we went that path, possibly buying out investors, which is part of the also the share buyback. So there's sort of what would be on the table down the future. Here's a couple of examples of where exits have succeeded in the last 5 years. This comes from investment bank Centerview Partners. As you can see across the board, there's some big ones like Medigate, 2 billion, and they sold that 9.3 times revenue. One thing I'll touch on in this space, again, from my background, multiples in this space are massive, as you can tell. Traditionally, I guess a lot of industries, it can be anything between, say, 3 and 6. These are above 8, or most of them. And as you can see, all the way down to Solid-Generio, which was a smaller acquisition of 400 million, it's still sitting at 7.5 times revenue. Information about the offer, I think that's probably what the most of you are probably wanting to look at. We're valuing the company at 16.5 million pre-money. Issue price of the shares 12.5 cents. So that 16.5 million is roughly 4.71 times revenue. So as I noted before, the exits are above, say, 8 times revenue. The 4.7 times revenue is what we're trying to add value to the investors and entice them to come in. We think it's a very fair price. Current existing shares is 132 million currently. The minimum subscription to have a successful close of this is 500,000. The maximum is 3 million, which is roughly 15.5% of the existing company. Minimum parcel, as Tim mentioned, is $500. The maximum parcel for a retail investor is 10,000. And then sophisticated investor can obviously invest anything above 10,000. For an example, if they invest 50,000, they're getting 0.25% or 0.25% of the company for that investment. Use of funds on a maximum 3 million raise. Inventory for US and Australia stock, we've roughly about 500,000. New product development, which is something we'll be able to ramp up, which will be fantastic. Obviously, the more products we have, the higher revenue we get. So we've got about 250 allocated to that, 250,000. Sales and marketing, that's the other really important one that we'll really put more money into our e-commerce meta cost and spend and really ramp that up. And obviously working capital gives us a pretty healthy balance sheet of roughly 1.5 million to over the next 12 to 24 months. And then there's the offer costs, which are around 180,000. So finally, why invest in Frasé Skin? Proven track record, proven traction. We're already moving. We're already generating income, and this year, we'll go close to being profitable, if not just under. Massive market cap. There's a $17.4 billion global market out there. 2 million Aussie outdoor workers that we can focus on here, and there's 30 million in the US. Unique technology, which I covered, clear growth path, retail, direct-to-consumer, B2B. They're all existing and all in growth stages. Strong economics. We've got 60, at the moment, 60% blended growth margin, and at the right moment. So the raise at 16.5 million pre-money is 4.71 multiples, which I explained, which we believe is a good entry point. And early stage pricing before National Australian Retail launch and Amazon US is built into it. So look, that covers off my presentation. So I will now hand it off back to Tim, and we can get some questions.
Well done, Matt. Very, very comprehensive. So I think the thing that I take out of that is, shareholders are coming in at a really exciting time for the company. You're scaling up, you're heading into the US. A couple of questions I wanted to, hand on from, there's 125 questions that have come in by EOI, and I'm taking a few of those. I'll take the Q&A. So if people do have a question to ask for, for Matt, Zach, and Beau, please put them in, and I'll put them through. Just looking at the US market, you've got 9 SKUs at the moment. Will you take all 9 SKUs over to the US, and which one do you think will be the biggest seller over there?
Look, I think we're taking them all over. I might hand. I know obviously this is sort of Zach and Beau territory, but we're expecting. I guess I'll let them cover it off. But we'd expect whatever we're doing well here, we'll probably emulate the US. But I'll just let Beau answer that.
Yeah, so at the moment we're going over with the cleanser, the moisturizer, the grub scrub, and the body wash. These are our most popular SKUs here. We found that the body wash is very popular in America with the body acne and stuff, but we've actually specifically made US sunscreen for that market with the Solar D Tech. So that should be ready by end of the month to bag on valve non-aerosol spray. So that's unique to the market as well. And the activated vitamin D technology that's in our sunscreen and our sunscreen in the US isn't in the US yet. So we're having that untapped market as well. So it's something that no one has over there. We will. So it differentiates us as well.
So Beau, do you see a difference between the Australian consumer versus the US consumer? Are there any sort of plans there or thoughts as to what you're expecting to happen over there? You've got 30 million tradies over there. That's the size of the Australian population, right? It's a massive group to be marketing into. Do you see them sort of liking something more? They're different to the Aussie tradie?
No, they're very similar, and they're not getting spoken to as well, just like tradies haven't here. Like we've had lots of US customers now, and I've got on the phone to them and rang them and said, like, why have you bought Frasé Skin? Like, we're an Australian brand. What makes us different? And they said men's skincare in America is absolutely huge, but no one's speaking to the blue collar workers. So he goes, as soon as I seen your guys' ads, I knew that the product would work for me because they've tried so many things in the past that just wouldn't work.
It's good feedback, right?
Yeah, it's a good phone call.
Have you sort of gone down an influencer strategy over there? Is anyone, how's your marketing? How are you doing that? How are you planning to sort of get in is it similar to the Australian rollout in terms of getting brand awareness? Where it's a bigger market, obviously, and you're doing a cap raise, but bigger dollars to infiltrate such a large market.
It's a very big market. Zach and I are actually going to New York next Thursday to promote the brand. We're over there for 2 weeks, so we've got a bit of a road tour. Flying into New York first, got a few people we can collab with. There's an old mates pub in New York that are keen to do some videos with us, and they've mentioned something today about a soccer player that could be there, like a Socceroos, so that'd be a cool collab. But it's mostly just building through organics. We've got a lot of US affiliates, so we're just taking the smarter approach this time than we did like when we first started. So we know what we're doing now. So everything that we've learned over the last 3 years, we can take it to the US and ready to dominate.
And then maybe Zach, might be a question for you. What's the difference between what are Nivea for men missing that you guys are, coming in and making a difference? Why is someone not taking on buying Nivea for men and then they're buying Frasé Skin? What's your point of difference to those guys?
I think like a lot of them are just sort of, they got like cheap filler ingredients. We are a little bit above benchmark for them, but also like what Beau said, we're building for trade specifically. So when we first started, we were our customer, like we pretty much built the products for us. So we like for 3 years, it's a long time to launch, but we spent so much time like, okay, I'm out in the scrub on the job site. What products clean my skin without drying it out, and then moisturizing, and then the sunscreen. So I think just the whole range and who we target and how we speak, that's sort of what they're missing, and I think that's what we sort of filled, not only from a product perspective, but also the consumer targeting.
So just take us back just a little bit. And this question came up in the EOI questions. How did 2 guys from Dubbo start formulating men's moisturizer? Like, how does that even start? Have you gone to someone, and is there IP in that formulation that you put together?
Yeah,
I understand the sort of the gap in the market that no one's speaking to the tradies.
Yeah.
The best people to speak to the tradies are the tradies yourself who are talking to like-minded individuals, and you get the space, right? So that you got authenticity there. But how did 2 blokes from Dubbo out of mum and dad's garage start formulating moisturizer and and the like?
Yeah, it's a funny one. Basically just like it's a whole COVID story, right? So there's just a lot of time at home studying. We just become really obsessed with it. There's a lot of YouTube. I had like about 200 notepads of just ingredients and what they do. But then we can't make it at home, so we found manufacturers in Melbourne, cosmetic scientists. I hired people, like actual people from cosmetics, chemists to formulate these products. So all IP owned, and then yeah, we just sort of went from there.
Yeah, a couple of questions coming in online. So maybe for you, Matt, a couple of financial ones here. How have you valued the business? Because traditionally it's profit times multiple, not revenue times multiple.
Yeah, I think that's. I mean, there's many ways of valuing a business, especially at this early stage, and I think you'll sort of back that up, Tim. We decided to do revenue multiples. Like I said, it is how a lot of the skincare businesses or brands do get valued, not profits. It's based on multiples. So that's it. We could have, I guess, we could have done it either way. But it just seems on industry
And
standards
your
that was an
comparables
easy one.
are all like for like, apples for apples, right? You're comparing versus
Yeah.
7.5 that you've seen for some of those other acquisitions there.
Yeah.
Other question for you that's come in: why go down the crowdfunding path rather than go and borrow more money from the bank if that was an option for you?
Yeah, look, I think again, it is a question, but my experience, my background, I don't like to have debt on the balance sheet. It's to me, debt's an enemy to an early stage business. It's great for when we're probably turning over 20, 30, 40, 50 million. Debt can be manageable. Debt to early stage can be very detrimental. It doesn't mean we haven't had debt, and we may use it in the future. But my preference is to have shareholders. We also went down that path in the crowdfunding because we're a retail product. This is a great message to get out. If investors didn't know about us, this was a great way to get to more potential customers.
Yeah, well, a couple of things to add to that. For those online, a business, and this is coming from the intermediary's viewpoint, a business with 40 to, I think it's 60,000 social media and 40,000 customers, is a great database to enable those people, ideally most of them are retail investors, to own shares in your company. So it's a great brand awareness play. I will say then, just with crowdfunding as well, the other attribute which we haven't gone into is the investor rewards part of the offer. So not only do you get shares, and the shares are priced at 12.5 cents per share. So, for instance, if I put in $1,000, I'm going to end up with 8,000 shares. And the other thing I will add to that, and maybe take this easier for me to answer rather than you, Matt, questions around liquidity. So it's not an IPO. It's not listed on the company. Won't be listed on the ASX at this stage, and maybe it never will be. So it is an unlisted private company that the shares are illiquid. So you won't be able to trade them with anyone because there isn't a secondary market. So just remember that when you're putting your shares in or buying those shares, putting your funds in, that it is an illiquid purchase. There will be an exit strategy, as Matt talked about. That may be a trade sale. It may be an IPO. It may be private equity buying it out. So that's all something to think about. But early stage companies, not unusual at this early stage for the company to be illiquid. So I was getting to investor rewards though. So one of the attributes of doing crowdfunding is you do get the shares, at 12.5 cents per share. Divide that into the amount you get. That's how many shares you get. But you will also get investor rewards, and not sure which one of the three of you is best to talk about what you get. But that is on the landing page at OnMarket, the table there. But it also will be in the offer document as well, as to at certain levels of investment, you get certain products. who wants to just talk about that a little bit more?
I'll just look for it. But Beau, do you remember it off the top of your head?
You don't
Not
need
exactly.
you don't need to go into exact
Yeah.
detail, but just
No, it's just a lot of products you're going to get. With every tier is different, subscription based as well. So in terms of investment, you get a certain amount of subscription for the year, esky bags and things like that.
In terms of, I encourage people to go onto the landing page at onmarket.com. You'll see that there in more detail. It's very generous from the guys. Just in relation to testing, there's questions there around did animal testing, organic testing, just making sure that obviously there's approvals there that have been done. Can you sort of run us through some of the testing and how you went about that?
Yeah, look, I mean, all our products are developed with registered manufacturers. So I'll give you an example I'm sure a lot of you have seen the bad press around SPF at the moment. That's knowing that space extremely, very, very well. Unfortunately, the brands end up with the bad rap. Majority of brands use the test results from the manufacturer, or it's just done through a manufacturer or a third-party testing group. So the SPF is probably the most prominent one that's been questioned at the moment. So all our labs, we had all our formulas retested and make sure they're in line. So instead of someone coming to us and saying we're claiming SPF 50 and they do a test and it becomes back SPF 20, which has happened a bit lately. We now have all that evidence to show that we are. Things like animal testing, we cover all that. At the moment, the only one I can think of that allows animal testing is China. I think they still do, but we're not. We don't have any plans entering China. But all our labs and all our partners, we're very stringent on making sure we have all the tests. Because again, a bit like having the wrong financial management or too much debt, things like that can really hurt you.
Yeah. Quick question for Beau and Zach that's come in. You may have had this before, I'm not sure. I'll just read that out. I'm a 62-year-old tradie. Should I start using your products or is it too late?
Never too late, mate. We had I had a phone call last week with the customer. I was our top one customer. He's ordered 33 times in 3 years. He first bought with us in a month after launch. He said he goes to the pub and girls come ask his age and he says, guess. And they say 40 and he's actually 57. So it's never too late.
There you go. Good answer. Question coming in, Matt. I think that's probably from Nigel, fits more into your space. To do with, I guess, operating costs. You're running at what'd you say, 3.4 million revenue. Coming to the financial year end next week, you're roughly around that 3.4, 3.5 revenue. You're near break even. Can you just split out some of those costs of the 3.5 or 3 roughly where that fits in?
Yeah. Look, I mean, I don't have exact numbers in front of me, but 90% of the costs split between marketing and manufacturing. So they're our really hefty costs. Manufacturing is a big part of it. Although the margins are good, it's still costly. And marketing is huge. So because we're an e-com brand, we're spending probably on average, say, $100,000 a month on meta ads. The cost of running the business, there's me, Beau and Zach. We take minimal wages for the purpose of making this business a success. Outside of that, we've got a very small office. So look, like I said, 90+% is marketing and manufacturing.
Okay. A good answer. And just, I guess, looking then at expansion into other products, question came in, would you ever look at doing a female range? That was one that has been come up. And the other one was, I think it's, in relation to you expand into mouthwash for tradies. I've had some bad experiences.
Yeah, look, we're not opposed to doing the females. Like, there's a big female tradie audience. I think it'd be a bit hard and inauthentic if we did at this stage, but the more we grow, we definitely go down that route. And apart with the mouthwash, look, we're open to further down the track, going different avenues, but we're pretty focused in skincare and our niche at the moment.
Okay. Getting back to the early days, or even now, your barriers to entry into the Australian market, can you give us some insight into that, maybe Zach and Beau, and then how does that sort of strengthen you or give you resilience and teach you sort of any lessons for the barriers to entry you're expecting to come up against into the US market?
Well, yeah, our barrier to entry when we first started, like every day I was using the shovel, every day Zach was using a hammer. We had no experience at all, and we've built the business to what it is today. So, and now we have all this experience. We have Matt behind us as well. So with all this experience going to the US, we know what's ahead of us, and we know how to tackle that market. We've got some partners in the US who have done it all before, so we're just relying on all our knowledge and taking it from there.
What is the number one barrier to entry over there? Is it just purely awareness, brand awareness, and sort of getting in front of people? I noticed in your website, or sorry, on the landing page and in your offer document, you know, Amazon now 79% of American households buy through Amazon. So, you know, there is no barrier to entry on Amazon, right? Anyone can jump on there.
Yeah, but Amazon's huge, and like you said, the brand awareness is a big play. So that's why we're going over to America next week to do 2 weeks of just filming and collabs and work. So Amazon's a big partner of ours, and you know, there's 30 million American men that probably shot them on Amazon. So blue collar workers, by the way, on Amazon.
Yeah. Just to add to that, Tim, one of the great things that we've learned from our own launch here and what we're doing in the US, and so many brands who go from here to the US fail because they just go right, much bigger market. We're going to take off because we've done well here. We'll do the same thing. They spend millions in marketing the same way they do it here. The good thing is about being an e-com brand and what we're doing, we've got 2 really good partners over the US who are working with us on this. Is it's a bit like a hook. You throw a hook out. If it picks up, then we run with it. So we might have 20, 30 campaigns going at once, costing $100 each. So we get to see which ones are working, and then once you see pickup, you put money towards that sort of campaign. That works both ways because it's cheap entry, and if we get it wrong, we restart. It doesn't cost us a lot. So they're sorts of examples, the things that we've learned from mistakes here.
Is this a US partner, Matt, that's doing that for you? Someone that knows that market, or is that an Aussie based?
No, it's a US, two US companies. I've got a mental blank. Beau, where's Mikey? And
Miami, which is like it's like Boca around in Miami.
Yeah, sorry. What's the company?
It's JD Media.
JD Media, that's right. So they're our main sort of group that are working on that side of it.
Okay. Questions come in on pricing. Are you competitive in the Australian market? Were you competitive in the US market? How are you priced compared to your competitors out there? How did you come up with the price, and what is the strategy on pricing?
Yeah, I'll answer that. So a lot of research went into pricing. I guess the guys started this process back in 2023. They, I think it was a bit of the term old suck and see, and just they came up with some pricing which they thought would be good for the market. It's not low end. There's a massive, I guess, call it mass pricing that goes from $10 to $20. High end is probably considered above $40 to $50 and upwards. Again, like they did work out that there's a space with the tradie. There was a massive gap between $20 and $40, which wasn't being filled. So that's where it started. Our sort of average price was probably high 30s when I came into the business over 2 years ago. My first point was I thought the price was too high. I thought we could get it closer to mass to be a successful product. We sort of, I wouldn't say fought, but we went back and forth quite a bit. We ended up lowering our price, but only, I think, $4 or $5. So our average price now is probably $33, $34, We do have some products in the like the body wash, which sits at about $24, but we didn't need to bring it down. Obviously, that converts to US is low 20s in the US when you take the exchange rate in, and that's again a massive hole in the market at that price. So look, we believe we're still at the right price. Growth's a funny thing. We may look down the future. It's a lot easier to lower the price than rise the price. So we're pretty happy where it is.
Yeah, good answer. Question here for Beau and Zach. The name Frasé, where did that? I know there is a story behind this. A really important one. Where did that come from, and how did that originate?
Yeah, so when I was 16, my best mate tragically passed away. So we started this in 2020, and we were searching for a name. And one of my other really good mates plays NRL, and he had Frasé written on his wristband. And then we said, "Geez, it'd be cool to do something for Frasé." And we sort of looked at each other, said Frasé Skin, and then from there just never changed the name. So it's always been a commemoration for him. My goal from the start was, when people die and your mates die, people sort of forget who they are. And my goal was always to make it international brand and have his name live on forever through supermarkets, international markets. And then I can always say that's his name. So that's us boys who were mates with him at the time can always remember him through that.
Yeah, well done. Well, you're on your pathway to be globally recognised. So, congratulations on that. I always ask this question of the company, and I'll probably go to the CEO on this for you, Matt. One of the key things for any shareholder investing into an illiquid company is having adequate and frequent reporting. So I'm going to put you on the spot, and I do this on every webinar we have. Will you commit to a regular update to your shareholders? Because a lot of companies don't. Let's say every quarter you'll send out, I don't know what your intention is, I'm sure it is, because I know you reasonably well, a regular quarterly update to shareholders, with all the information that they want to see, so they can update them on their shareholding and how the company's going.
Yeah, I think you probably know the answer to that, Tim. You've known me for quite a few years and how I work in companies. So yeah, look, the short answer is yes. I'd like to say it's quarterly. What I do find in these businesses, look, based on stories and success, sometimes it can be more often than quarterly, and sometimes it could be a little bit, further out. Could be 6 monthly. But I think at this early stage, I'll be updating shareholders as often as I can with news and development. That's sort of how I work. Sometimes I've got to update with bad news as well. So it's just keeping the investors.
Yeah, I mean, at this scale-up time, I think you're going to have some really good stories to tell, especially that sort of US market infiltration. I know we're confined to share too much about forecasts, given the legislation, but there are questions coming in, and I think people are keen to know the 1, 3, 5 year plan for revenue, particularly with the US, ideally then profitability. I mean, when do we see the US being sort of your major revenue line rather than Australia? I mean, that is only a matter of time, I would have thought, given the size of the market over there. So if you can share as much sort of on the future, Matt, put you in a hard spot, I'm sorry, but share as much in the future as you can, that would be sort of important for everyone out there. We've still got effectively, you haven't had anyone drop off. We've still got a massive number of people online.
Yep.
If you could let us sort of some insights into that, please.
Yeah, definitely. I mean, as you mentioned, we're sort of restricted on giving exact numbers, but I think the easy way to look at it is, e-commerce here after 3 years, building it to 3.5 million in revenue. We're entering a market which is roughly 15 times bigger. I think, to say that we're going to be doing 15 times 3.5 in 3 years is a bold prediction. It is a possibility, obviously, but that's going to be based on success. I would expect, I mean, from my management of the accounts and forecasting, for the rest of this calendar year, so 6 months, I've forecasted US income to be literally, I think, about $60,000. I'm not focusing on how successful it's going to be financially at this point. What we're trying to do is make it successfully in traction. So if we can see traction and growth, that's all I'm concerned about now. Look, I think realistically, again, comparing it to Australia, our first 12 months of revenue, or our first full financial year, we did 480K. Let's say we can do 480K in our first financial in the US. I'd say it would be extremely disappointing. And then that's just on our own e-commerce page. And then we've got Amazon. So Amazon, again, we're going to be working with this partner for the next 2 or 3 years to build Amazon. All the feedback I get from all our partners in the US, experience that I've had in the US, if you make it on Amazon, you don't have to worry about anything else. So obviously, Australia's our home. We don't want to walk away from the Australian market, but we don't need retail in the US if we're successful on Amazon in the US.
And Matt, at what stage then do you bring in sort of US manufacture? You talked about that in your presentation. You're currently in Victoria. When do you, and have you got the contract signed or looking to get the contract signed, subject to obviously demand coming in? When do you look to set up your 3PL and your manufacturer sitting over there in the US, and where would that be?
Yeah, something that's easily answered, and it's to simply answer it, it's already done. So our manufacturing partner here is more of an intermediary. So their global business is manufacturing or taking on manufacturing for their clients. So I think their very first client was L'Oreal, for instance, who didn't do manufacturing in-house. So they took on their Australian manufacturing and then ended up doing it globally. So what they do, they've been a very old contact of mine. I brought them into the business, and instead of us dealing with 10 different manufacturers for 10 different products, we just deal with one manufacturer. They're also now a shareholder. They came in on the balance sheet, which is fantastic. So they're a significant shareholder in our company, which means a couple of things. Our major partner and manufacturer is on our side. They're a shareholder. They give us significantly better trading terms than anyone else can give anywhere in the world that I've seen. So that was part of the deal. We're doing, our payment terms are basically 60 to 90 days post delivery of products. So, again, from an early stage business, it's huge. So to answer the question, so what they do is, so if we go, at the moment we've got 6 or 7 SKUs that we're manufacturing here. I think Beau just mentioned that the US sunscreen has been manufactured in the US. That's through our manufacturing partner, which is DevCos International. They have manufacturing partners all over the world. So they've got 300 in the US that they can go to and say, can you copy this formula that we're doing in Australia? Make it. So the answer, we've got 3PL set up already. We've got and we've got a storage center set up in Utah, I think. So all that's ready to go. We've actually got product in the US, except for the sunscreen. All the product in the US at the moment has been made here. We've just sent some of our product over there. But as soon as we see growth, we will be switching that manufacturing to the US simply overnight. So it's ready to go.
Okay. I'm conscious of time. I've still got a couple more questions I want to get through, but we'll probably finish around that 1 p.m. East Coast time. Questions coming in, Matt, on dividends. So return on investment, we talked about the exit. I think you handled that really well. Question coming in, and this is from Tyson. Does the company have a dividend policy? Does the board anticipate paying dividends to shareholders in the future once the business reaches sustainable profitability? Good question. If so, what factors would determine when dividends may be introduced?
Yeah, look, it's a good one. We don't actually have a dividend policy at present. I guess my goal is, at the moment, all profits go back into the business. I would, as a shareholder myself, I would not expect to see dividends immediately in the next, I'd say, 2 years, but that can turn quite big or quite quickly. But look, that's my view. I don't see dividends being paid in the next 18 months to 24 months. But like I said, based on US traction, what happens in our grocery chain here, we will definitely be paying dividends based on profit.
Yep, that's pretty standard for for what's going on. Question then, just in relation, Matt, I think we talked about, one of the things in Investor Awards was the subscription business. Do you see that sort of taking off? And can you explain a little bit more about what you get if I join as a subscriber?
Yeah, look, we have heavily focused on the e-com brand and what we call bundles. So to give you an example, I think we've got 5 or 6 bundles, and bundles are just mixing individual products and creating a bundle. That probably, it's almost 90% of our sales. So you don't get too many people coming to buy an individual product. So bundles is a big part of our business. And that was our focus and has been our focus. What we realized is this subscription-based model is getting bigger. It's massive in the US. It's not too bad in Australia. It hasn't got the traction it has in the US, but it's basically someone will come in and say, I want to buy this bundle. When they go to checkout, they get an option for subscription, which means they'll get delivered that bundle every month, as long as they're a member. And they get a discount for becoming a subscriber. So we are definitely focused on working on that. The boys have worked very hard, and we're beginning to build that. We want to grow that. I don't know the exact numbers, but subscriptions, I'd say, are definitely under 5% of our turnover. We want to get that as quickly as possible over 10%, and move it up to close to 20%. We know in the US we'll see subscription-based model work a lot better. So that's our subscription-based model. So when you become an investor, depending on how much you invest, there's all different levels of the size. You will get 1 month free product in a 12-month subscription. So I can't remember exactly, but that may be around a $1,000 investment. If you do a $10,000 investment, you might get, I think it's around 6-month free subscription out of a 12-month subscription, something like that.
Yeah, no, it's pretty accurate. Quick question, a couple more to go. Question from Selwyn. Matt, you mentioned that some similar competitors had emerged but had not been successful to date, and that you have a first mover advantage. So what other means do you have to stay ahead of these guys and ahead of future competitors, such as R&D on new products, etc.? How will you guys still be sort of the market leader in this space?
Yeah, it's a good question. I think the true answer to that is not resting on your laurels. We constantly adapting and changing. I mean, Zach and Beau, this is their bread and butter. They're brilliant. So it's watching your competitors. Again, Beau and Zach are fantastic at this. They'll come in the morning and say, "Oh, you see this group just did this," and one group's come out and tried it. I think they've named their company after Grub Scrub or something. So they're all over it. They watch it very, very closely, and they watch the rise of our competitors. They also watch the fall of our competitors. So staying ahead of them is super important, and that's up to us. Our messaging, our e-com messaging, and our spend. Like I said, we get a lot of media attention because we are that first mover. Not I think most people on this call will understand how difficult it is to get onto something like the Today Show. We've been on it 3 times because of the story. So we will continue. We've got great media partners. We've got a great PR group that have been fantastic. We've got, my background, as you know, I've got lots of personal contacts in media as well. So it's basically stay ahead of the game. If we sit back and go, yeah, we've made it, let's just keep going, we know that that's going to be dangerous.
Okay, so we've hit the hour mark. I'm conscious of time. What I normally do in these webinars is give you guys the last word. So if Zach, Beau, Matt, if all of you want to have a chat and talk, that's okay. But is there any? You're about to go into what we call the private period next Tuesday. It'll open to everyone in that EOI. I imagine everyone online. You've still got a massive number online. Has registered for that EOI. Have you got a sort of a message to what effectively are your potential shareholders. Just a last message that you want to partake and give to them.
I'll let you two jump in first, and I'll finish it off.
Yeah, look, it's a very exciting time for us. We're eager to have everyone in. There's a lot of exciting things coming on board, you know, supermarkets, US, and yeah, just can have everyone on board.
Basically the same as what Beau said. It's been a big journey to get here, and yeah, I'm just super excited to be in the position we're in, and I hope all you guys trust in what we're doing and see where we're going, and I'm sure we can grow it 10 times as big as it is now. So thanks, guys, for being on here.
Yeah, just finally for me, you know, I've got a lot of grey hair, and as the boys said, you know, they brought in an adult into the business. So I've worked with a number of startups. I've been in this sort of venture capital space for a while, and I'm super excited. I mean, this business and its growth is extremely exciting, and I wouldn't be involved in this if I didn't think it was had a huge opportunity. So, yeah, I think getting any investors on board, come along for the ride. I think you'll enjoy it.
Yeah, no, well said. And from an OnMarket side, you know, we see a lot of exciting companies. You guys are at that real sort of hockey stick, bottom of that hockey stick, I think, to be honest, you know, where you're about to, as Beau said, you know, very, very succinctly, you know, you're about to hit one of the big two Australian supermarkets. That takes a long period of time. I know you've been working hard at that. That's exciting. Obviously, you're going to be mainstream Australia. But then also the US is a massive market, and from what we can gather, you know, underserved, and there's a massive gap in the market that you're going to hit like you did in Australia. So, you know, we wish you guys the best of luck with the raise, but also with the business going forward and your expansion. Just in wrapping up, the offer then opens for investment to those that have registered their interest. I think I've been sort of hammering that pretty hard in terms of just register your interest. You will get that email next Tuesday morning. That's Tuesday, June 30th, which will enable you to invest in the company. And you know, wish you guys the best of luck. And thanks for joining us. And thank you to everyone that's still online. There's still a massive number. And thank you for joining another sort of OnMarket Questions from the Crowd webinar. Thank you, guys.
And thank you, Tim, and the OnMarket team. Thanks very much.
Yeah, pleasure. Thanks, guys. Cheers.
Thank you, everyone.